Hey, what's going on, guys? So this is going to be a scan here for the week leading into June 20th. Pretty important week. However, we do have a short week, so I want to make that very clear as to, you want to kind of be in and out of the market and take a few setups and just call it a week, right? That's basically what I'm looking to do. With any sort of short week ever, I am always, thinking of taking the most quality setup before I do anything, because price action can get pretty bad on these weeks. So let's just take a look at a few charts and a few ideas that we have here for the long side and the short side, and then we'll wrap it up there. First I want to go over is Tesla. So we go to the Tesla weekly chart, and we could see how it was a really nice back test that we had into the Trump-Elon beef that we had here on June 5th, right? Whenever Elon started going off on Twitter, and it was basically just one big back test of the top of the base from March in through like April's base, right? And then we had a nice counter trend rally to the upside, and we could now view this as kind of like an accumulation zone off of the election gap. Basically, one big higher low on the weekly chart that was built out here from the, I'm sorry, not election gap, but earnings gap. We filled both of those, right? It's kind of started around the election gap and then undercut that into a fill of the earnings gap, and then we had the range kind of built out here before the expansion. So this candle right here is kind of defending that expansion as we speak, right? And it's a very big amount of volume. If you guys go to the 15, however, you could see how within the 15-minute chart that a lot of that volume actually came in towards the low of that candle, right? We had at 3:15 p.m. we had a hammer candle on the 15-minute that had 19.7 million volume traded, biggest 15-minute volume that we've seen, and most of the volume has been stacked up towards that close, right? And then subsequently to that, we filled the gap, we found a higher low the next following two sessions later into June 6th, and then we had a really nice rally back to the upside to then go fill this gap. Basically, the gap that broke down structure broke beneath in a smaller time frame distribution from the expansion we had out of this 6-day compression, followed by like a shorter time frame UTAD, and then a failure that was confirmed through like May 30th into June 2nd, and then the lower highs, right? So that is a very big area on the chart, and you guys can see how if you extend over this zone from where that gap is, that's kind of where you had a previous support at. And we're getting two wick rejections off of that point. So I'm going to be very interested to see what Tesla does up around 332.21. I feel like a break and base over that spot and over that level can lead us, back into, if you guys go to the daily chart, you could also see how that would be a really nice undercut and reclaim of the 921, and that would be like the risk level in the trailing stop range off of that 332.21. You guys could also see how basically off of that gap, we didn't really have any true strong seller of any sort of size, right? What we more and less did was we pulled back, we found a really nice breach into this gap, this small little gap, and this is kind of near equilibrium. If you're looking at the higher low to the high, not quite into equilibrium, so this isn't a perfect chart by any means, but I don't think there's any perfect chart within Mag 7. But yeah, 332.21 to like 322.50 is going to be the area that I'm watching on Tesla, and we'll see what happens within this range, right? We're closer to the 322.50 area right now. And basically, we had a really nice strong tape with elevated volume leading into that Friday session. So if we take fibs, pull from swing low, swing high, we can see how right around equilibrium is where they bounced it and kind of held it above there into the close. And slightly beneath that, we have the 322.50 level in, as well as the 618 at the 320 psych area. So I want to see if they could build out on a smaller time frame, like the right shoulder, to start off the week, and then maybe we could catch some calls, take them all the way back up to the top of the progression gap, and then see if we could claim that, and then use that as a trailing stop, and that could be a super nice asymmetrical bet with like probably a 3 or 4 R multiple. If we go take a look at the other tech, we can see how Apple is still trading with relative weakness. It's kind of similar candle structure over to banks. Banks have not been trading strong either, and that's something that is definitely quite alarming to me. If we go to the bank chart, you can see how off of this very big, the tariff gap essentially, you could see how you have a lot of a laggard type of sequence happening here on the banks, leading up into that gap fill, which is a test into where we potentially have a UTAD. It's kind of a similar chart to the S&P. You could look at it in two ways. You could see this as like a UT or a UTAD. And then you could see this range over here within this like wedging upwards pattern of like a buy climax. You could see that as like the redistribution that's currently happening, and that does not mean that we're going to just top off of the CPI candle and then we're going to break beneath and lose the structure and move all the way back down to the 565 spot. Like I said, flows are very strong, and I've been saying that for quite some time here. Has how your June 20th and June 30th expiration, they're kind of in the way of seeing a really nasty, meaningful sell. So the plan this week is more just looking for what goes on around today's low, because that is a secondary lower low into the gap. And the gap fill is entirely filled down towards 593. If you guys go to the daily chart, that would also be an area where you would find an undercut of like the 9, a push towards the 21, and then maybe an undercut and reclaim of the 21, and that could be a decent long side opportunity off of like this 592.58 spot. Another area that is a big focus of mine is going to be 586. This is the big progression gap here that we have a cluster of support built off of. So if we were to lose structure and lose 593 and lose basically like 595 to like 593-ish, and then we would back test that and find a rejection point. 586 to 579 is my next spot. As we know, there is a ghost wick off of 579. They've built phantom prints throughout that area weeks prior to this action. And as you guys can see, that's a big ghost wick where there was actually no true trading action established down there. It was more and less only down in the 583.20. So 586 to 583.20, and then beneath that, obviously 579. Those are like smaller time frame reads there, and 579 is something that I wouldn't hold a lot of emphasis behind until the expiration, and then within a window of weakness, we could potentially see all the way back down to 579. However, I am still somewhat confident that we could reach that within the next month. Okay, it's not even that big of a decline from where we're at right now. It's about a 3% decline, and I do think a 3% decline can come, especially with the catalyst on the table that we have, like BOJ on like June 18th, I believe, and with an unexpected rate hike there. We could, start building out like a yen carry 2.0, something similar to the July action that we had over here, right here. And then that would also pop volatility really, really hard, and that would probably set up a long opportunity after that event would be over. But that would probably pull us all the way back down to 565. Obviously, we have like the war tensions and whatnot. And another thing that I want to talk about here, guys, real quick, is the futures are not at the Friday high. I actually thought they were for a moment. They're actually at the Friday close. Futures are flat. It was a contract roll, and you have to click this little button down here to be able to get the new updated action there. So we'll go over to NVIDIA now, because I think NVIDIA is also a chart that could be, bringing some sort of aggressive downside, in my opinion. We're right off of the DeepSeek gap. We're right off of the LPSY territory from like where the DeepSeek all happened at. We're right off of that UTAD range as well, and we filled the DeepSeek gap off the February OPEX high. The February OPEX high is up towards 140. 344, and we're actually beneath that right now, and our high of day on Friday is actually off that spot. If you take a look at like your EMAs, you could see how the 9 is getting really tight to price. This is kind of that upwards type of buy climaxy looking action where You have a path of least resistance set up off of 140, 150 support on the hourly chart, and then you have a gap fill down into the 140 psych. If we can lose this area and hold this as newly found progress from sellers, and then we start to break down the structure and really lose a lot of the ground cover that has taken several days on end to cover from buyers, this would be like a lower high scenario where you would get a pull all the way back down to like the 130s, low 130s, potentially equilibrium of the range in the mid 130s, but just those general areas up here towards like 140 to like 140, 150 are very big for NVIDIA. We have to obviously wait and see what happens into the start of the week, right? And we know that there was sort of a big seller that was stepping in off the earnings day. Kind of something similar over to like, except not as aggressive, kind of over to like February 27th. And with a gap up like that, that is given up the next following session afterwards, that's not behavior that you really want to see, especially subsequently to that. We had a weak buyer that is not, really covering a lot of ground after filling that gap and holding that gap and moving higher after filling the earnings gap. So I think that they could just be rewashing, gapping up and selling, and then rebidding back lower off of like low 140s, and then move their bid down into like the low 130s. So yeah, I mean, this is a gap sweep. The entirety of the gap is not filled into 130, 129. And then the action that we're looking at right now on this hourly chart is not anything that is really impressive to me. It's kind of something similar to SPY before we had the rollover happen with this action to the upside that was just not impressive. There was no size traded behind it. There wasn't really any sort of super strong buying action really occurring there. We'll go take a look at TSM now because TSM is a very interesting looking chart. So preliminary supply levels that we were looking at before were basically off of this right shoulder over here, right? So we had this right shoulder, and then we saw how like it was trying to give up that spot, couldn't quite do it. It was trying to kind of hold the footprint candle opening gap area and beneath 200, but we never had a true seller that was, showing off strong intention behind selling this thing. So we invalidated that level, but the other level that we have in mind is to where the distribution actually started in an aggressive manner was with this volume off the October 17th candle. And then that was basically like your preliminary supply. And then you basically had two more up thrusts subsequently to that were very distributive. And now we're just pulling back into that on effortless, low amounts of volume, very effortless, and all of the volume on this name is still at the upper part of the trend, right, off of this deep seek candle, right? So January 27th candle is very, very big, and we're also breaching a gap right now. We have gap fills beneath us, and that 207 spot ties in really nicely with like the high of that deep seek candle. So I would say pulling back down into the moving average and then seeing the pop off of it or seeing if it gives up is something that's going to be very big. I would really like to see us hold like 212.60 and beneath that for a short, and then establish your risk off of that area. However, if we were to get like a float to the upside that was like really weak, and then we continuously look distributive and maybe buyers were exhausted there, then that would be a really nice opportunity to catch about 11 to 13 deltas to the downside on a short with a risk all the way up towards the top of the gap fill. Does it have to happen up there? No, I don't think it does. And do I think this name's definitely overextended? I mean, the amount of ATR extensions above the 50-day on this thing is it's ridiculous. And it doesn't really have the cleanest look right now, in my opinion. So for either side. So we'll just wait and see what goes on over there with TSM. So yeah, TSM is going to be one that's on watch. Obviously, Energy is a name that has looked really, really nice. I mean, if you guys go to the weekly chart here, you could see the amount of momentum coming off of this 138 million volume traded weekly candle. on the weekly, and then you could see how it's pulling back through that April area, and you could see like clear rotation in comparison to other sectors, right? So yeah, that's going to be a very interesting look over there as we move forward here, and that's going to be a rotation of mine that I have on watch, and I'm going to see if that one can remain strong, and if that can remain strong, then obviously that would up my conviction in terms of looking for the downside on tech to continue. We go over into like MU. We could see how MU is on a break over this resistance, and there's a very big path of least resistance established on this with a big terminal shakeout. Lots of big players liquidated on a capitulation from 88, obviously down into 63. So very, very nice shakeout, and then we're back above this huge weekly level over here from like this double top over in 2022 off of like 97. And ever since we reclaimed that, we've had the counter trend rally of like 18 points. So really, really nice strength displayed here with a minus 1.12% S&P, and this is only down 0.5%. It's a pretty volatile name. So I'm interested to see like scalps on this for the upside. Obviously, this is not the most optimal fill by any means, but like it definitely doesn't have it doesn't have really that bad of a look. It's kind of something similar over to like Disney as well. So like these are two accumulations that are at their upper extremes, and there's not really much we could do about like catching a super good fill. But we could go with the smaller expiration and try and see what we can do. Disney 118, it's at 118 right now. It's at the upper extremes as well. This has an external high sitting in the accumulation zone all the way from 2022 summer. And then what we're doing right now is we already filled the gap. We already consolidated off of this area, and it brought a smaller redistribution into the bottom extreme, right? And then we found a really nice buyer, really nice bull peg that was created here on May 7th, and then we had the continuation ever since, right? And now this is building out a nice consolidation. A lot of the volume is at the upper part of that trend, all the way up here at the very top. So you have to be very, very careful with setups that look like this. But if this were to get high and tight leading into the new week, I think that this would still have room all the way back up towards like the mid 120s to low 130s, right? So very interesting chart over there. Kind of interested in that into this week. Now we go over to Ford. Really nice break over this creek here, and it's trying to sit on top of that and find a buyer on top of that. We're also getting a back test into our moving averages right now off of like 1040. If you guys go to the weekly chart, you can see how it was a shortening of the thrust with these equal lows and then an undercut of those equal lows, and the amount of volume that was coming in on this name has been absurd, right? And we've been deviating away from that $12 bear gap that doesn't have any price action traded within it for quite a little bit of time, right? With the lower end of the chart looking pretty accumulative. So I'll be interested in this one for a swing trade. Very, very, very far dated options, just because it's cheap to buy time on a name like this, considering the low IV. Yeah, I'm really interested in Ford because the bet here on a swing would be an upside reward of 15% on the underlying with like literally 1% of downside risk. So super, super interesting chart over there, and it's really, really nice risk to reward. So that's probably all I'm going to be watching into this week. There isn't really any other chart that sticks out to me. A couple market gauges that I'm looking at would be like gold and what gold does off of like this previous all-time high. A lot of volume traded up here from this previous high in April 22nd. So that's interesting, and we'll see if that could find some continuation. And yeah, another one would be like crude. So kind of ties in with just your XLE sector, and crude is giving back most of its move today, but it's pulling back towards that Friday close. And like I said, I mean, it's at a big point where like, you could see a down trend line break on like your smaller time frames, like your daily and whatnot. And I want to see if this one can kind of continue its way to the upside. So yeah, we'll see. But that's all I'm really going to be watching. Maybe a few bank stocks if the overall sector kind of gives us off the signal that this is still weak. Like I said, triple inside bar here as we speak here on the weekly chart. And like I said, it's now beneath that tariff gap, and it's now towards the support down here from May 23rd. It's only 1 day of support, so it's not anything that's like I don't really care about that level. If we were to break down, and you guys can see how on XLF's daily chart, we were really, really, really compressed, and then what happened was we had the market sell, and banks were kind of the leader of that whole sell-off on the war news. So, and before that, we were not strong at all. So, and that's sometimes a leading indication that the market is not in a healthy state right now. So, yeah, that's all I'm really going to be watching, guys. If you have any questions, feel free to ask. Another name that I might consider trading, even though it's been trading kind of bad, is Valero Energy. If you guys go take a look at Valero Energy right now, really, really, really nice base formulating here. Really nice shakeout underneath the 120 support. Now getting really tight and coiled up here off the top of the tariff gap as well. We filled the upper bear gap, and now basically we have like a path of least resistance off the mid 130s, and I think that this one could potentially move back to 144 if energy stays strong. And it's been really, really coiled up, so that's something that's definitely very interesting to me. And yeah, a lot of the energy names are reclaiming very, very big critical levels. Um, we have names like Zom is the biggest one, and this one's sitting right off of that tariff gap as well. So yeah, very big, critical, and important tapes that we have here leading into the new week. 110 is a very big spot within Zom, 110 to 112.50. So yeah, we'll see.